Is Cardano still a good investment? Of course it is. Even in a down market in 2022, Cardano vied to consistently advance its products. As a result, investors should feel confident because the project's utility keeps growing. This is a factor that distinguishes Cardano from several other meme currencies. Despite a lot of competition, Cardano ADA is still one of the most popular cryptocurrencies. What more can we ask for? Ever heard of Peter Lynch? He is regarded as one of the most accomplished investors of our era. From 1977 to 1990, Lynch managed Fidelity Investment Magellan Fund, which yielded an admirable average annual return of 29.2%. Under his directive, the fund's assets grew from $18 million to $14 billion, thanks to the growth at a reasonable price strategy, combining value and growth investing principles. Lynch's financial strategies teach us that investing in industries or specific companies one is familiar with can help uncover undervalued assets. And this might involve concentrating on a specific niche such as DeFi, NFTs, or Layer 2 solutions in the crypto context. Conducting a thorough fundamental analysis before investing in any altcoin is also essential for success, according to the legendary investor. Lynch coined the term 10 baggers to identify stocks with the potential to grow tenfold from their original purchase price. Using Lynch's investment principle, it is possible to reach a valid conclusion that no cryptocurrency is a failure. It just needs the application of the right strategies. So Cardano is not a failure and it's about to get better. The Cardano founder Charles Hoskinson shared a personal experience amid the downfalls of the crypto banks in March. Credit Suisse is one of the several banking giants which was caught in the wide-reaching financial turbulence and it had to be sold to survive. Then Charles Hoskinson shared an anecdote involving his experience with the struggling bank. According to Hoskinson, Credit Suisse refused to open an account for him back in 2014, when he was the CEO of Ethereum and based in Switzerland. The bank explained to him that cryptocurrencies were too dangerous and unstable to work with, as he reiterated the story in his podcast streamed on March 20th. More specifically, the Cardano founder pointed out the irony of all the troubles that Credit Suisse and the general banking sector were going through in the context of his disapproving attitude towards crypto and Hoskinson himself 9 years ago. The Credit Suisse people said, "Oh, too dangerous. Crypto, we couldn't possibly consider. It would be so unstable and so terrible, and we have a reputation to protect. We're here for the long term. We've been here for over 150 years, and we couldn't embrace this crypto thing." And lo and behold, who's buying Credit Suisse? UBS, only if the Swiss government bails them out. He added, "The banking system is falling apart predictably because it has always been a Ponzi scheme, based on taking other people's money and using it to multiply and create money out of thin air, give it to people all around the world, and then you make windfall profits from it until people get a little shaky, in which case you socialize your losses and give those losses to society, and this is what happened for years in the banking industry." From the lens of the Cardano founder, the anti-crypto attitude has backstabbing effects. In addition to the irony of the bank's current state and the historical attitude towards crypto, it is worth mentioning that the former Credit Suisse CEO, Tidjane Thiam, declared Bitcoin as the very definition of a bubble back in November 2017, arguing that the only reason to buy or sell Bitcoin is to make money. So when Charles Hoskinson joined Alicia Owusu-Akyol on episode 14 of Cointelegraph's Hashing It Out podcast to discuss the current state of crypto and take a deep dive into Cardano, he presented his perspective on the recent happenings in the industry, crypto adoption in Africa, and more. It's thrilling to believe that the Cardano founder has a solid stance on crypto, especially Cardano ADA. Hoskinson also addressed the issues surrounding Cardano, including delayed updates. Then the show started with Hoskinson's explanation of why there was a need to create Cardano, highlighting that even though creating a new network involves rebuilding the network effect, it allows one to have an unadulterated vision, which is pivotal for what Cardano intends to do. On the current state of the network, Hoskinson has acknowledged that it takes time to get things done, with about 85% of the initial roadmap completed. It took 7 years for Cardano to grow from an idea to an ecosystem. We have already seen some huge wins like the NFT sector, he said. The Cardano founder also acknowledged the multi-chain nature of the industry, saying that everything is going multi-chain, even if it starts on Ethereum or Cardano. He believes that to stand out among the various blockchains, there is a need for the right product market fit, great user experience, and a softer onboarding process. However, Cardano has come under some criticism for continued delays and network updates over the years. Hoskinson attributes these setbacks to betting on the wrong technology and being a bit ambitious with the roadmap. Well, another area of interest for most followers of the project has been the partnerships and collaborations between Cardano and projects in Africa. The Cardano founder concluded that it was more reasonable to deal with companies and individuals rather than governments, and he plans to expand Cardano's reach on the continent from East Africa to West Africa, with Ghana as a prime focus. The podcast was just a means of saying, hang in there, Cardano holders, the ride is about to get interesting. Hoskinson's unrelenting effort to talk about Cardano and his plans is highly admirable, but at the same time, people are still doubtful of Cardano's potential. Regardless of this, there are still great chances for great returns. Cryptocurrency analyst Benjamin Cowan recently warned that Cardano and other altcoins are primed for losses when paired against Bitcoin. Cowan told his 738,700 Twitter followers that against Bitcoin, Cardano could bottom out at 11 cents, a drop of 69.8% from current levels. I think ADA Bitcoin would be lucky to bottom at 8 millionths of a Bitcoin, but 4 millionths of a Bitcoin could be the final support, though it could represent a higher US dollar valuation at 4 millionths of a Bitcoin than at 8 millionths of a Bitcoin, end quote. In a chart illustrating the likely trajectory of Cardano when paired against Bitcoin, Cowan seems to suggest that the 7th largest crypto asset by market cap could hit the final support level in the third quarter of 2023. Citing his own experience, Cowan noted that seemingly small losses as altcoins depreciate against Bitcoin tend to balloon over time. A common response to my post about altcoins bleeding back to Bitcoin is, hey, only minus 2%. But it goes on and on. I have lived this before. Before you know it, your altcoin is down 90 to 95% against Bitcoin, and you thought it was holding up well the entire way down, he said. Referencing an example of Chainlink's performance against Bitcoin from 2018 to 2022, the analyst explained that an altcoin that shows bullish price action against Bitcoin during a bear market is likely to perform well when the altcoins start rallying. Yes, for instance, Link Bitcoin showed relative strength in 2018, and then did very well in 2019-2020. So if you notice certain things about altcoins putting in higher lows on their Bitcoin pairs, which most won't be, then that's a good sign for that altcoin during the next altcoin season, he added. Furthermore, with the crypto market down, Cardano investors have been vulnerable to disappointing performances from ADA. These holders are among the worst hit in the industry, recording the world's profitability margin out of the largest cryptocurrencies by market cap. Out of the top 10 largest cryptocurrencies by market cap, Cardano investors are ones witnessing the most losses. However, there is a light at the end of the tunnel, because famous crypto analyst Dan Garbadello has taken to Twitter to share an optimistic take on the future of ADA in terms of financial gains for its holders. He tweeted that he expects ADA holders who have been hodling for the last 1.5 years are going to be heavily rewarded. There are zero guarantees here, but my intuition tells me that all the ADA holders who have endured the last 1.5 years are going to be heavily rewarded. Hit the like below if you're still here and ready, he tweeted. Similarly, on April 5th, he tweeted that he believes in ADA price recovery since the total value locked on the Cardano chain keeps growing, and he reckons this has to be a key factor for future ADA price growth. As a result, owning 10,000 ADA isn't necessarily a bad idea. Cardano has all the hallmarks of a successful crypto project: a great team, a supportive and powerful community, and a strong technical foundation. Some investors became disappointed in this coin as they assumed it was unable to deliver on its promises. However, they seem to be a minority, and most holders believe that the future price of ADA will overtake its previous all-time high, so be sure not to snooze. But that's going to do it for today's video. Make sure you click on the subscribe and notification buttons, and we'll see you in the next video.